Welcome back to this channel. This is Unfiltered Forex with me, Clement, and I am here for uh, a recap slash forecast of what we have gotten so far this week and what we are expecting later today and tomorrow, of course. So today is Thursday, August 31st, and yeah, the time is here 9:18 a.m. GMT. First, so we're starting with a recap. Let's look at yesterday. Okay, this week this is the NFP week, as you know, and this is also the last week of August, and this is also the week where the September begins. On Friday it's September 1st. That's tomorrow. So yeah, in this video we're going to look at the events we have gotten so far this week and then talk about the ones that are coming. Let's start with yesterday. Yesterday was Wednesday, right? Mm-hmm. Before, no. Before yesterday, there was Tuesday. Yeah, there was something important on Tuesday. Tuesday, August 29th. Yeah, Jolts job openings 8.8 million. Worse than expected. The estimate was at 9.4 million job openings, and the previous reading was 9.16 million. As you can see, revised from 9.5 million, meaning this month they have updated the last month's reading to show that there were less job openings than reported. That, of course, means there is less labor demand than was reported at the time. So here we are, 8.8 million. As you know, this is a reading that shows the demand for labor that is there, the number of job openings. Very direct relationship there. And of course, this is supposed to reflect also the strength or weakness of the labor market, meaning if there's high demand for labor, that of course means the labor market is strong. If there's low demand for labor or the demand is weakening, that of course means the labor market is also weakening. Let's look at this report itself. So, over the past few months, the number has been around 9 million, 9.5, 9.8, 10 million, 9.5, 9.9. So you can see over the past few months, the number was consistently below estimates, and then except for this one time, but in general, the numbers have been coming in consistently below estimate. So the fact that this number was below estimate, that part was not much of a surprise, but being this much lower than the estimate was, of course, a surprise. Compare this to this time where we were expecting the forecast was at 10.4 million job openings, but then we got 9.9 million job openings. Yeah, it's kind of a similar situation here. There has been a big miss in this number to show labor demand is almost taking a nosedive. As you can see also, there have been revisions. Last month there was a revision revised downwards, and this month also, last month's data, there has been a revision revised downwards. So of course, you know, when we're expecting the NFP on Fridays, that's tomorrow. So the market is really watching out for those revisions. These revisions mean a lot to the market because if the Federal Reserve, if the Fed is making data based on data that was inaccurate at the time of reporting, then that of course means the risk of over tightening is very high. Therefore, if the numbers have been revised downwards come Friday, like we've seen in the past, of course you know what to expect. I'll get to that in a few, but yeah, this is just a recap of what we got on that day, on Tuesday. Go to Wednesday, that's yesterday. On Wednesday, ignore these many releases. We'll just focus on a few. The ADP non-farm employment change was at 177,000 jobs. This is worse than expected. I didn't look at the ADP report itself, but especially because this data is usually flawed. Sometimes it doesn't reflect exactly the situation of the labor market. It doesn't exactly reflect what you can expect come the NFP. It's just a number. Like, yeah, this is a private non-farm employment change because ADP is a private company and they process data on behalf of employers for the employees. Yeah. So you can see this is one other time where there was a big miss, and now again we got a big miss from the forecast, and then these other times the numbers were generally according okay, above high above the estimate, and yeah, this time we gotten below estimate. Nothing really to, and you can see here the revision. This number has been revised higher from 324k to 371k, which is kind of crazy because we are seeing this, what can I call it? This mismatch of data between these two reports. The ADP here is showing signs of a strong labor market, and the Jolts job openings here, you saw the revision is showing weakening labor demand. So yeah, of course, the ADP is kind of not so good. It usually functions as a smoke screen to just fool the markets of what to expect come the NFP. Let's look at the GDP and the GDP price index. So the GDP, as you watched in the previous video, the GDP is the most lagging economic indicator, and it's released in 3 stages. So this one, as you can see, it was a preliminary release, and there's two main indices. And as you know, the GDP is released by the BEA, Bureau of Economic Analysis. You can see I don't have that tab open, but yeah, you know it. Bureau of Economic Analysis. So here is the GDP. So through preliminaries and then the final one. The final one now will come next month, I think. Yeah. So you can see it started with 2.4 high above the forecast. This was very high. This was a very volatile day, if you remember, and yeah, that really spooked the markets. So, and then the forecast here was at 2.4%, and then the actual was at 2.1%, below estimate. That was, yeah, that also brought about a lot of volatility in the market, pushing that soft landing scenario the Fed used to vouch for a while ago, but these days they don't mention it at all. So yeah, this is that kind of soft landing scenario. But anyway, this is a preliminary release. We're going to get the final one, and the final one is likely to deviate quite a lot from the preliminaries. Yeah. Continuing, the price index, the GDP price index. This is an inflation reading of some sort, comprised of the GDP report as a whole. As you know, even the PCE, the PCE price index is part of a bigger report called the Personal Income and Outlays Report. So yeah, the PCE is an inflation measure, the PCE price index, and the GDP price index is another inflation reading. Though it's very lagging, that's why we do not talk about this at all. So yeah, when this data comes out in sync with the other one, it just adds fuel to the fire. It adds the volatility onto the already existing volatility brought about by the bigger report showing good news kind of scenario. And then you remember here the ADP showing softening jobs numbers. That's also good news in these market conditions. So you know this data coming out below estimate showing signs of softening. That was generally good news for the market, and you saw how the markets reacted, as you're going to see in a few when I go there. Yeah, today, let's go to today now. This is Thursday, August 31st. Euro CPI, we can ignore this ones for now. This is the PCE now. The PCE I was telling you about, we just talked about a few minutes ago. Core PCE price index. Core PCE price index year over year. Initial jobless claims, PCE index year over year, PCE price index month over month, personal spending month over month. These numbers are very important, including this one, the Chicago PMI. But let's talk about the PCE first. The PCE, as you can see, the estimate is above the previous reading. The estimate here for the YOY core number is 4.2%. The previous reading was 4.1%. Core PCE price index month over month change is expected to remain at 20 basis points. PCE price index year over year 3.3% is the forecast and 3% is the previous reading. The reason why, and yeah, for month over month is the same. If you remember, even last month, during last month's release, the month over month numbers were also at 0.2%. The base is 20 basis points. Okay, the reason why this PCE is expected to notch higher while the CPI and what do you call it? Yeah, the CPI and the core CPI have been cooling for some time. It's because this PCE price index is a lagging economic indicator of inflation. If you remember the previous video, I talked about leading and lagging economic indicators, and among the what do you call them? The lagging economic indicators, inflation readings, in the group of inflation readings, this is among the lagging inflation measures. That's why this one is still expected to rise because, yeah, it's expected to peak later than the other readings, the CPI, PPI being the main ones. So, yeah, for this is the current market expectation, but it is very likely to come out below estimate because inflation has cooled like drastically, and that change is very likely to be reflected in this PCE price index, in the core PCE price index. As you know, this is the preferred measure of inflation by the Federal Reserve. Therefore, yeah, it's very watched by the market and it's going to be volatile. Jobless claims numbers here at 235k is the estimate. The previous reading was at 230k. If this number, of course, comes out below the estimate, showing like 200k or below 200k, which is very less likely to happen, of course, that's going to mean the unemployment rate is likely to remain low. This is jobless claims numbers, the number of people filing for unemployment claims. If the number comes out high, like in the range of 240s and above, 240k and above, that of course is going to be interpreted as softening labor market, meaning we're seeing a bit more unemployed people and therefore the economy is expected to cool, inflation is expected to cool, and that's a good news kind of scenario. So you can see all these releases, the PCE and the initial jobless claims number, the personal income analysis report as a whole is being released at 12:30 GMT, and also the initial jobless claims numbers are coming out at 12:30 GMT, 12:30 p.m. GMT. So that's in about 3 hours. Yeah. So this data is going to be, as you have heard me, is going to be very volatile, and yeah, that's just going to end there. It's not, these PCE price indices are not especially very useful in determining a lot of changes we are going to expect in the future, because as you've heard me mention, this is a lagging indicator of inflation. The only reason why it's monitored keenly by the market is because this lagging measure of inflation is what the Federal Reserve uses to set monetary policy. That's probably the only reason why this thing is widely monitored by the market, the core price index, the year over year number. Yeah, let's go to tomorrow. Here we're not going to talk about these things. These are minor releases. Tomorrow is when you get the NFP. Friday, September 1st. CHF and national CPI. You can ignore those ones for now. And then now here we are. Average hourly earnings, month of month change, non-farm payrolls for August, participation rate in August, private non-farm payrolls in August, unemployment rates in August, and then some CAD numbers, and then the PMIs are coming out. This is a manufacturing PMI. As you know, the manufacturing and the services PMIs by the ISM are released on the first and third business days of each month. And in this case, Friday is the first business day of September. That's why we have the manufacturing PMI coming out on Friday. Usually, if you know, you frequent visitor to this channel, or just if you frequently monitor these releases, you know, usually we get these two, both PMIs, the manufacturing and the services PMIs, before the NFPs, and they are usually very useful in determining what to expect, giving someone a bias on what to expect during the NFP. So currently we don't have a lot of data to go by. We can't make a very informed forecast because the PMIs are coming out later. So here we are. Private non-farm payrolls, unemployment rate. Non-farm payrolls, the estimate is at 170k. The previous reading was at 187k. It was a below estimate by far. Yeah, you can see here, this is the historical data. 187k was the actual last month, and the forecast was at 200k. The previous reading was revised to 185k, revised from 209k. You can see that small notes popping up there, revised from 209k, 185k. So these revisions, again, they are being monitored very keenly. Even this number, this 294k, in the June NFP report, this number was revised downwards. I can't remember exactly by how much, but you know these things. These numbers, most of them have been revised downwards by the BLS because, for political reasons mostly, data is released to show good news, strong numbers, and then later on revised downwards to show now the actual picture of the labor market. So here, the forecast is at 170k, probably hit or miss. I can't say what to expect quite for now, because I might not even trade this release. I'll explain why in a bit. So this number is definitely going to mean a lot, but something the market is really watching out for is the revisions. Okay, now I believe I've talked enough about that. Private non-farm payrolls, of course, this is the NFP minus government jobs, right? And the government jobs usually are the ones that prop up the general NFP number if the private non-farm payrolls come in weak. Continuing, unemployment rate for August, 2.5%, expected to remain constant at historical lows, really. This is something else the market is watching out for. Should the unemployment rate tick up to, let's say, 2.7%, that's going to be very good news, because the Federal Reserve again is expecting to see the labor market to cool so that they can pause rate hikes again for now, or decide to raise rates if they see the labor market is not cooling. So of course they're monitoring this unemployment rate and the non-farm payrolls numbers. Average daily earnings, these numbers are also being closely monitored, but for now you can just pay not too much attention to them. Continuing, now this is the PMI. The PMI is showing the level of economic activity, and it's a very useful report. So during this time, this is probably when I'll be getting into my trades after the volatility of the NFP has come and it has passed. When we come to the ISM manufacturing PMIs, that's where I expect to see a change, especially in the prices index. I expect the market to shift big time here during this hour. So you can see 12:30, the non-farm payrolls come out, and then at 1400 hours GMT, the ISM manufacturing PMI drops, and then we're going to see what what to yeah, we're going to see some interesting numbers there. Of course, I think for now I'm done. Let me now shift to the charts. Here we are. This is the US 30. Okay, as you can see, it's mostly been an uptrend since this time. This is during the Jackson Hole Symposium. Jerome's speech. Jerome's speech was during this hour, 1400 hours GMT, 10:05 a.m. Eastern Time, and yeah, during the next hour, the market flipped and bottomed, and yeah, it's been an uptrend ever since. Of course, you know why. Continuing, I don't know how I don't know how high this market is going to go, but let's look at the high time frame and see if we're going to see something. So from this, it looks like for now, it looks like the market just wants to form a lower high, then continue the decline. If I would place just a simple trend line here from this high and then this and then this, something like that, something like that. I mean, it's just a line, really. Okay, so from this line or this, let me not call this a line, this is a series, right? This is a series of lower highs the market has been forming. As you can see here, where's that pen? Yeah, this is a series. As you can see here, this was the first high, this is the first lower high, because the market peaked there but it didn't take out the previous high, and then this other one, another lower high, and then as you have seen from that trend line, we are expecting, oh man, that's really ugly. As you have seen from that trend line, we are expecting what? Let me do this. Yeah, but as you have seen, we're expecting another lower high to form probably here. As you can, this coincides with the beginning of the month, September. September, as you know, is usually a very bearish month for the stock market. Historically, the market usually doesn't do good on September. So yeah, and then on August, as you can see, August started here, and yeah, oh my god, August started here, and it's still a red candle because this is the opening price. As I can see from this line here, this is the opening price, and then this is what's going to be the closing date. This line, it's not sure. Forgive my terrible drawings, but you get the idea. By the time September is starting, the first day of September, we're going to see a lot of volatility, of course. Probably, I don't know if it's then or today or early next week when this lower high is going to be formed, but you can see there's a series here, and this series is what is price action generally saying, yeah, we might make another lower high before the downtrend continues or gains a lot of momentum, ushering in the historically worst month for the stock market, that is September. So yeah, so far that's it for the US 30. I am not going to look too much into the details. Of course, the intraday price action movements, you're going to analyze that for yourself. You're going to see what to expect. This is the euro dollar. This is what I had on the euro USD. I had had some bad luck last week because this is the first setup I had last week. This was on Tuesday, 22nd August. I shorted here at the London Open, but unfortunately, my entry was an hour too early, so I was taken out prematurely, and then boom, price just dipped to my take profit in the next like 6 hours. So yeah, it was bad. And then, as you can see here, there was a retracement coming. I was expecting this decline. This is a flag. I expected this decline to start during the New York session. There was a major data release we were expecting. I think it's the PMI. I'm not sure if it's the PMI, the preliminaries. I can't remember clearly, but yeah, there was some big data we were expecting on this Wednesday. So yeah, price again left without me, and then cancel out that move, came here, and yeah, of course I had deleted the limits, so I missed this opportunity. I missed genuinely missed this opportunity, and then now I just waited for the market to come here. If you wonder what this trend line is, let me show you in a bit. Daily chart. Yeah, this is nice. So you can see here, this is another series, just as we have seen on the US 30. This is a low, and this is a higher low, and this is now another higher low. And as you can see, price did make a clean reversal, and it's this reversal is likely to continue depending on how the data is coming in. Anyway, we're going to see that in a few days, just a couple of days, 2 days, we're going to know where this market is going for the next few weeks. And yeah, for now, this one is a buy. It's a buy. The euro is going to pump. That that's almost a no-brainer. Don't expect much. Yeah, I think I'll stop there for this video. Thanks for watching, and yeah, we'll talk about that other stuff when I'm talking about the NFP recap when I come back for the recap. Anyway, have a nice day, have a nice week, have a nice weekend, have a nice NFP. I am done.